Welcome to Rule Classroom Live. I'm your host, Albert Liu, joined once again by Rick Rule. Rick, good to see you. How are you?
I'm fine, Albert. The better to be talking to our classroom constituents with you. Thank you.
We're going to have a great stream today, Rick. I want to apologize in advance if my studio appears to shake. We are not having another earthquake. It is my son upstairs with his friends. It's spring break, and my house is like Cancun this week. So please excuse any disruptions. I had Brian London on the stream yesterday, and that's maybe the happiest I've ever seen him outside of after his New Orleans investment conference is finished for the year, because investors are taking it on the chin. First, it's April 15th, tax day. April 16th, getting really hit hard, especially in tech with the NVIDIA announcement. But if you're a metals investor, a precious metals investor, there's a bit of a silver lining. So let's talk about that today, Rick, just the outstanding year we're having so far and what, I guess, the approach you think we should be taking in this environment.
Well, first of all, I think that like having a healthy son and his friends enjoying themselves at your house, that a gold bull market is something to celebrate. You need to celebrate both and apologize for neither. I will say, and we've talked about this a lot in the Rule Classroom, that we are in a gold bull market now. There's no doubt in my mind. We're seeing inflows, retail inflows into physical gold ETFs. We're seeing the follow through of money coming into the gold equities, which we didn't see 9 months ago. The whole gold move 9 months ago was about central banks. The move is much more democratic now. And congratulations to those people who, like myself, got in early. Now we need to take stock. 9 months ago, we said the gold price has to go up. And when the gold price has to go up, the gold stocks have to go up. That's happened. Something's happened, doesn't need to happen again, and it doesn't need to continue to happen. Make no mistake, Albert, I don't think the gold bull market is over. I believe that over the next 10 years, the purchasing power of the US dollar in terms of the goods and services that American citizens consume will decline by 75%, much as it did in the decade of the 1970s. And I believe that the consequence of that will likely to be, over 10 years, continued very strong, at least nominal gold price performance. It wouldn't surprise me to see gold's upside at least mirror the dollar's downside. However, one needs to decide what type of investor or what type of speculator one is. One needs to decide what role gold plays in one's portfolio. If you were buying gold in anticipation of a near-term rally, in terms of its dead cat bounce, in terms of its reversion to mean, that's occurred. And if your orientation is as a trading or is being trader or trading orientation, or if you're a very aggressive speculator, this is the time to begin to take profits. The fact that I believe that the gold price over 10 years goes up twofold or threefold or fourfold is irrelevant to the fact that gold is in real terms up substantially, and in the context of some of the leveraged gold stocks even more. What you need to decide is not what gold does in the absolute, but rather what you do with gold in your own portfolio. If you are a trader, this is the time to look to take some profits. If you are an applied speculator, by the way, I am very much an applied speculator, this may be the time in your tertiary gold stocks where you've seen doubles and triples without any underlying increase in the fundamentals other than the anticipated margins as a consequence of an increased gold price, this may be the time to sell enough of your position that you have the rest of the position for free. We call this the point of no concern. Don't mistake this for Rick Rule saying that the gold price increase is over, that the gold rally is over, that gold has lost the place that we have talked about so much in the Rule classroom. We have not, as a society, solved the problem of government debt. We have not, as a society, solved the negative real interest rate after real inflation, reducing the purchasing power of the US dollar. We haven't begun to deal with the politics of funding $100 trillion in unfunded federal promises. Until those three things happen, my gold stake isn't for sale. But I'm different than many of the people who participate in these calls. To the extent that you're a speculator, to the extent that gold is another asset class like Bitcoin or something else, you need to consider taking some of the gains that you've enjoyed. Often you bought gold in anticipation of just such a gain. If you have realized your goal, don't let greed take it away. History, Albert, is important to consider here. I came into the business in 1970 or 1971. I forget which, to be honest with you now. And I watched the gold price in the early part of the decade of the 70s go from an admittedly price-controlled $35 an ounce in 1970 to $200 an ounce at the end of 1974. And that move from $35 to $200 attracted a lot of attention and minted a whole bunch of experts. In 1975, concerned about inflation, the Fed and the political establishment in the United States raised or allowed the interest rates to rise. And the consequence of that is that over 9 months or 10 months in 1975, the gold price collapsed from $200 an ounce to $100 an ounce. Is past prologue? I don't know. What I do know is that in the event of a real interest rate rise, there will be people who are shaken out of their gold position. And if you're going to continue to hold it, you have to do so being psychologically prepared to handle a downside before you get an upside. I watched people, when the gold price declined from $200 an ounce to $100 an ounce, get shaken out of their gold at close to the bottom. And those people who didn't understand the underlying reasons to own gold in the decade of the 70s missed out on a move in the gold price from a $100 bottom to an $850 top in 5.5 short years. For me personally, my gold is not for sale as long as the reason for me to own my gold is intact, which is, to repeat it, negative real interest rates after real inflation, $36 trillion in on-balance sheet liabilities, and in excess of $100 trillion in off-balance sheet liabilities. That's why I own gold. My gold isn't for sale. If your reasons to own gold were different, if they were more related to trading, then you need to begin to consider taking some profits. The second thing I want to talk about, Albert, before we get on to the questions, is the banner that's on the screen. First of all, I want everybody listening to this to come to the Natural Resources Investment Symposium, July 7 through 11. But in anticipation of that, I think it's important that we are interviewing every exhibitor and every speaker at the conference before the conference. And those interviews are published here as they occur at the Rule Classroom, and they're absolutely invaluable. I'm not suggesting that you buy every company that I interview at the Rule Classroom. What I am suggesting is that this is a wonderful way for you, with very little effort, to get an overview of companies so that you have the ability to study the companies more deeply. It's worthy to note, too, that in virtually every interview I've done, the CEO of the company has said, if you're interested about the company, if you're curious about the company, call me. I want to talk to you. Here are my contacts. They are inviting you to get a curated tour of their company. Take them up on it. Watch the interviews at the Rule Classroom. It's absolutely critical. We're putting together this community of thousands of you. Having the community of thousands of you allows us to deliver access to you, members of the community, that you wouldn't otherwise have available to you. It would be silly of you not to take advantage of that. All right, Albert, commercial's over.
All right. Thank you, Rick. And thank you for addressing that issue. I've been getting lots of questions from friends and clients about exactly the point that you made. And when I was on the call yesterday with Brian, I sort of, with some reluctance, but felt that I had to do it, pointed out that in his career and your career as well, Rick, gold has made new highs at times, which it hasn't revisited for many, many, many years afterward. And if you look at how long it took after the move in the late 70s, and we had another move decades later, it took a long time to retest those highs. So very good advice, Rick, from you. Please, if you're interested in the symposium, you can go to symposium.ruralclassroom.com for details. Rick, you've got a lot of great speakers lined up again, some of whom I wish they would include in the discussions they're having right now in Washington, D.C. regarding the Fed, regarding trade, regarding budgets. It seems like we've got the experts in Boca Raton that they should be talking to right now.
Well, Albert, you make a wonderful point, and thank you for the opportunity of doing another ad for the symposium. But it's important. I think the macro discussion, while it's always interesting, is becoming critical now. The arithmetic that I talked about in the Rural Classroom 2 or 3 weeks ago about the math of America is something that everybody needs to focus on. And I look at all this idiocy, all of this misinformation online, and I think it's important that in addition to discussing these issues, we need to discuss these issues with people who know something about them. There's lots of narrative, there's lots of opinion, and a lot of this opinion is coming from absolute bozos online. We try to do something different in Boca Raton. We try and have people that address global macro issues, big political issues, but we try to get people from the belly of the beast, people who not only know what they're talking about, but in fact experienced it and in some cases caused it to occur. To wit, talking about the budget, talking about the deficit, talking about the fiscal impact going forward, we have David Stockman, who literally wrote the book, The Triumph of Politics. He is, in a biblical sense, from the belly of the beast. He was a congressman, and he ran the Reagan attempt at the Department of Government Efficiency. There's nobody better placed to talk about this than David Stockman from the belly of the beast. When we talk about the corrupt structure of Wall Street, there's nobody better to talk about that than Nomi Prinz, a former partner at Goldman Sachs, an insider, again, from the belly of the beast. When we talk about the Fed, the excesses of the Fed, the dispute right now between Powell and Trump, as an example, who better to talk about that than Daniela DiMartino Booth, a researcher from the Dallas Fed, not a failed journalist at the Wall Street Journal or some hack on CNBC, but rather, as I say, somebody who cut her chops in the belly of the beast. When we talk about the over-leveraged nature of the American economy, the interplay between the government and Wall Street and all of that, we've got Jim Rickards, former general counsel of long-term capital management, whose failure, you'll remember, Albert, damn near brought down Wall Street. It's important that we have these macro discussions. It's equally important that we don't have these macro discussions with the butchers and the bakers and the candlestick makers, the sort of would-be experts that are becoming, or at least seeking to become, opinion makers online. It's important that we have discussions that are curated by people who have lived the experience that we're talking about today. We're going to deliver that to you at the Natural Resources Symposium. If you, just a pure appeal, if you like the work we do at the classroom and you're amazed that you get it for free, support it. Go to the symposium. You can't go to Boca Raton? No problem. We'll bring it to you via live stream. Remember this is a naked commercial appeal. Remember this, unlike any other investment conference on the planet, if you don't think that I've delivered value for money, email me and I'll give you your money back. The financial aspect, the financial risk of attending the conference, either live or online, is mine, not yours. So please come. Please come for you. Please come to support the conference.
Excellent. Yeah, thank you, Rick. I love obviously attending, speaking, participating at the conference, but I have to say I love where we have it, but I also love the app that we have where you can watch it online. Sometimes I watch it online while I'm physically there from my room. It's wonderful. So symposium.ruleclassroom.com is where you can go. I also want to add that Danielle DiMartino Booth, in addition to being a former staff member of the Fed, she was actually a successful journalist. So she knows how to conduct journalism as well. She was also an insider. And James Rickards not only was chief legal counsel, but he was literally in the room at the New York Fed negotiating the I guess bailout, the thing that saved the entire financial system from going down. He's literally in the room with them leading the discussions. So he has a new story every year for us.
I remember, Albert, you and I think having lunch with Rickards years ago, and him saying being there is immeasurably more scary than reading about it. He said, it isn't as bad as you think, it's worse. And you need to have experienced it to understand the level of apprehension that you ought to have concerning it.
Right. Okay, let's get to some of the questions, Rick. We got many friends from the classroom. Hello, Frank. Hello, Diane. Let's see. Arthur asked a question, and it actually, I have a question first. I'll go to Arthur's because they're related. People who are going to move on from their gold holdings, Rick, maybe perhaps, like you said, they're market timers or speculators, or it could be just regular investors that were a little bit overweight gold. And I've been there, and now because of the move, they're really overweight gold. It would be nice to have something to move into. When you move into cash, you are holding a depreciating asset, albeit a liquid one, so-called dry powder, but it does have an expiry date on it. Do you have any ideas? Where should people be looking? Should we be rotating into silver as an example? What thoughts do you have regarding that?
Well, rotating into silver, if you're speculative, might be a good idea. The silver hasn't moved. The silver stocks are doing quite well, but silver itself hasn't moved. So if you're a speculator, moving into silver might be a good idea. I'm not rotating out of gold, but I am putting an increasing amount of my speculative position in unwanted juniors that control what I think are potential world-class deposits in out-of-favor commodities. So things like Centaurus, Sovereign, Meteoric, Bravo, those types of things. So that's one thing that you could do as a speculator. For investors, my suspicion is that you keep moving into the oil and gas space. The oil stocks are forecasting a near-term recession. In fact, I don't think they're forecasting a recession. I think the oil stocks are signaling an economic slowdown that's already occurring, partially as a consequence of global geopolitics and tariffs. The downturn that we're seeing in the oil price does a few things. It raises the cost of capital for oil companies, and it exacerbates the underinvestment in sustaining capital investments that are being made by the oil companies, which impairs their ability to produce in 2 or 3 years. It decreases the willingness of companies to do development drilling. Wells that were solidly economic, $70 a barrel, are much less economic at $60 a barrel, which of course hastens oil recovery. So if there are people who are moving out of gold on a valuation basis and looking for an asset class to move into on a valuation basis, if there are people that bought gold because it was an unloved asset and are looking for another unloved assets, and they're investors as opposed to speculators, I think the oil markets are the place to be.
Okay, now let's get to Arthur. Rick, this is a question about deploying new capital in the gold sector. Points out that seniors, he's talking about Anglo, Franco, Wheaton, have performed very well. Would you be inclined to add money to those positions or allocate to quality gold juniors, mid-tiers, and physical silver?
That depends on the investor more than it does the market. when I revisited on a back of the envelope exercise Agnico Eagle, and I reviewed my notes from last year's conference, I learned that I had anticipated that they would generate about $5 billion in free cash flow this year, assuming $2,700 gold. No, we have $3,200 gold. If this gold price holds, the cash flow assumptions that I made around Agnico Eagle are farcically low. For investors, if you believe in the gold bull market thesis, which I do, and you have a horizon that extends, as an example, beyond the upcoming conference, because it's possible that gold is overbought here. If you're an investor, I think you still go with the best names. My experience, Albert, over 50 years in this market, and sadly it took me 10 years to learn it, is that in a gold bull market, the beta, the amount by which the gold stocks outperform the broad market, is sufficient for most investors. If you look at a chart of the XAU going back 50 years, what you will see is that a gold bull market fairly frequently generates 300 or 400% returns over the course of the cycle. With big stocks, good stocks, rather than buying the XAU as an example, if one buys the 5 or 6 best producers and leaves out the junk, maybe actually you underperform in terms of beta, but you underperform with a lot less operational risk. So for investors allocating new capital, particularly those who are new to the space, particularly those who have less than 2% of their portfolio in precious metals, I would suggest that you go with the best of the best. You go with the Francos, you go with the Wheatons, you go with the Agnicos, stuff like that. If you are doing the work at the Rural Classroom, in particular, if you've done the deep work that we do in the classroom, if you've watched the instructional videos like the nosy questions to ask mining companies, then absolutely positively you go down the quality trail. If you're willing to do the work, you can take the risk, but you have to be schooled on how to do the work, and you actually have to be willing to do it. You have to have formed an opinion in your own mind about the value of these companies at certain gold prices. If you do that, then the price information becomes valid. If you aren't willing to do the work, if you aren't willing to go back through the instructional material at the Rural Classroom, don't come down the quality trail. Be content with the beta in the sector. You don't need alpha if you aren't prepared to do the work.
Okay. And when you talk about the top 5 and underperforming beta, is that because of the implicit optionality leverage that comes with the?
It's actually that's absolutely right. It's pernicious, but the truth is, rapidly increasing gold price increases the margins of the least efficient producers the most. The most efficient producers, obviously, if the gold price goes up $500, there are some producers who that will generate a doubling or tripling of free cash flow, whereas the efficient producers will experience a 15 or 20% increase. What I've learned over 50 years is that you can take away some of my upside if you take away most of my downside. So for the investment part of my portfolio, rather than buying an ETF, which would be the 35 or 40 biggest gold producers in the world, what I try to do is capture the beta with that part of my money. And I'm actually willing to underperform a bull market. If I got a 275% return as opposed to a 350% return over 5 years, but I de-risk the process, that's a really good trade for me.
Okay. And that profit profile will not be unfamiliar to options traders. I think they recognize that out of the money performance curve. Okay, question from Conrad. And this is funny because you are neither an immigration lawyer nor are you a real estate broker, but Conrad is contemplating a move to Vancouver from Germany. I don't think this is a typo. He describes himself as a young Euro poor here in Germany. But he wants to know about moving to Vancouver just to get closer to the action, Rick. Is there a benefit in moving close to the action as far as an investor goes?
If he's willing to do the work, and if he's willing to experience continued poverty until he enjoys success, Vancouver is a difficult place to be poor. Living costs there are very high. It's also a difficult place to be rich because taxes are very high. But if you're talking about participating in the game from the belly of the beast, There's no place better than Vancouver if you have the willingness to engage. Vancouver is a community where gold stocks are the stuff of conversation in coffee shops and bars. Vancouver is a place where, with very, very little effort, you can meet mining company executives, geologists, engineers, the flotsam and jetsam, everybody, really with very little effort. As you might imagine, Albert, I'm not a particularly shy person. So within 18 months of my moving to Vancouver, if my memory serves me correctly, in 1970, I was able to develop a truly amazing range of contacts as a young 18-year-old, dead broke university student. So if the young man is willing to endure the penury that comes from being a renter in a very high rent environment, and then if he's willing to endure, once he's made some money, having half of it stolen by the Canadian state, Vancouver is a wonderful place. Again, in a sense, in the belly of the beast. There is no better place to serve an apprenticeship as a speculator in junior exploration than Vancouver. It is the epicenter of that.
Rick, I'd love to see a thread within the Rule Classroom of you and others discussing on techniques they might use to get ahead. It reminds me of a story that Mario Gabelli told once about his entry into the financial industry. I think he came up in the Bronx way back, and he used to go to Manhattan, find a tall skyscraper, and just go floor to floor looking for a job. And it worked out pretty well for him. I don't know if it would work out today, but those stories are very interesting. And maybe in the Real Classroom, people want to talk about it because there are people who are young people who are interested and willing, and I think have persistence to do something like that.
And perhaps one of our jobs at the classroom, Albert, would be to, on the one hand, recruit mentors from the community who believe that they have the obligation to give back, and people in need of mentoring. If we're forming a community here at the Real Classroom, that might be a very valuable service that we could do do for both classes of people.
Yeah, and I think there's plenty of participants on both sides. Let's go to Diane. Diane is asking about Mayfair. Rick, any thoughts?
Don't know enough to comment. I do not own it. The last time I reviewed it, which was probably 9 months ago, attractions that it had relative to others weren't obvious enough to me to spend more time on it.
Got it. Pete asks about Copernico Metals.
Copernico, I don't own it. There's a good exploration team there, and there's a couple of big targets there. The people behind the company are young guys who I've known for a very long time. They've been successful twice before, too successful in a sense for my liking. When they floated this last round of companies, their prior successes impacted their cost of capital to the extent that I was unwilling to participate in the financings. What I like about them is these guys have the ability to finance in any kind of market. And they are sophisticated enough that when money's offered, they will take it. They explore for big targets, and they explore for big targets with a very good team. The consequence of that good team pre-revenue is that their general and administrative expense is pretty high. For myself, I'm not going to buy the sombreros or the Copernicos until I see a discovery hole. I'm not going to participate in the process because the cover charge, the market capitalization relative to the current asset values, is too high. They're pricing in the anticipation of success. I would rather experience success and then overpay to participate after that success had occurred.
What about the second company, Ecora Resources?
Ecora, I'm a shareholder of. If we're talking about the same company, there are two that go by a similar name. Ecora, the London-listed royalty company, is a company that I'm a fairly large shareholder of. I consider it to be undervalued relative to its mid-tier royalty and streaming peers. The other one that has a similar name, Aclara, is a rare earths company, Chilean domiciled, active in Brazil, which I also own a position in.
Okay. Do you have rankings for those?
Not off the top of my head, I'm embarrassed to say.
Okay.
I don't have access to my database right now.
That's fine. Rankings available at ruleinvestmentmedia.com for anyone who's interested in submitting a portfolio for rankings. That's where Rick receives them. Frank has a question about how does one mitigate riding an Explorer from discovery to production only to see it taken over and losing full value? Sometimes investors get left out in the transactions, Rick. What can you do about that?
Nothing. You have to enjoy it. The idea that you get paid a 30 or 40% premium as opposed to a triple, which is what you would hope to get if they went to production themselves. I've committed worse sins than banking 30 or 40% profits. When I look at Sovereign as an example right now, which I own, my suspicion is that as they de-risk that process and as the project gets closer to production, that Rio Tinto will take them over. If Rio Tinto takes them over, maybe they're a 50% lift from here, a 60% lift from here. If they actually go through the work of putting the thing in production, and in 5 years develop into, as I believe them to be, the first or second most efficient producers of both rutile and graphite in the world, it's not unlikely that I would see a 10-bagger. If I have a choice, probably they would stay independent and I would get the 10-bagger 5 years from now. But if my consolation prize is a 50% lift in 6 months or 12 months, I have done worse.
Yeah. So what risk is the management most concerned about in that case? The risk of completing the task, the risk the environment will change, the risk the time won't be what you forecast? What are they most concerned about?
I think what the managers would like to see is a change of control premium where they get paid 3 times their annual salary and bonus, and then they get hired on.
Yeah.
Yield to management is always yield to management. And the outcome that yields the best financial outcome to the management team is the one that the management team will be predisposed to accept.
Okay, so this is a checkbox that appears early on in the rule classroom analysis, Rick, and that's maybe one thing that Frank could consider, right? Is early on these change of control provisions. You've mentioned that before in your lectures.
Correct. There was a particularly egregious example, which we talked about in the rule classroom, where the change of control positions in favor of the management and board were 3 times the market capitalization of the company. In other words, if a transaction happened, the officers and directors would get all 100% of the benefit. These are egregious. And when you are looking at the discrepancy between the market capitalization or enterprise value, depending on which is a better metric for you to discuss, and net asset value, you probably have to consider as an unregistered liability change of control fees. They can be substantial.
All right. We have Mark asking about LifeZone Metals, Rick.
I'm a LifeZone shareholder. This is for somebody who is willing to take technical risk, political risk, and process risk. LifeZone controls a sulfide nickel deposit that I've known about and loved for 30 years. I tried as part of a consortium to buy that asset. The Friedland family and their friends outbid us. And the consequence of that is that I became a shareholder of theirs. I really like this deposit. I like the management team. The sulfide nickel business is absolutely in the toilet. This is easily one of the best 5 sulfide nickel deposits in the world. And it is a company that benefits, at least indirectly, from the entrepreneurial genius of Robert Friedland. Benefiting from Robert's genius is something that has been an important part of my own success for a very long time. This is not for the impatient speculator. This is also not for the person who isn't willing to endure genuine political risk. The deposits in Central Africa, in a country where there isn't well-established precedent around mining law, and where there is social pressure for, let's just call it the redistribution of wealth after the wealth has been generated. So it's not as though there aren't challenges and risks here. Given the size of the prize, I'm personally willing to accept the risk.
Jay is asking about Dakota Gold. We just had an interview. Was it yesterday, Rick? That's going to be up soon if it's not
Yeah.
already.
Yeah.
What do you want to say about Dakota for Jay?
The guy who runs Dakota, Bob Quartermain, is somebody I've done business with since 1991. He does about one deal a decade, and they always make me money. I like hanging out with Bob. He also is unusually candid in describing risks to me. When I say, Bob, what could go wrong? He says, oh, well, you don't have that long a day, but I'll name you the top three, which is really good. That means at the very least that he's aware of them and he's willing to translate them. The thesis around Dakota Gold is pretty simple. He took one of the largest historical producing gold districts in the world, the Homestake District in South Dakota, and he staked both on strike and parallel zones, figuring that the best place to look for gold was in the head frame of one of the richest gold mines in the world. Making a long story short, I suspect that the up-dip extension of that deposit, the so-called Richmond Hill zone, which is closer to the Wharf mine, is worth in excess of the market capitalization of the whole company. And you get the original Homestake and footwall style mineralization absolutely for free. In addition to that, you get Bob Quartermain. I would urge people, as soon as Albert does his wonderful editing skills and gets that thing posted, that people who care watch the interview. I think it's an unusually good interview. And I think it's an unusually attractive opportunity for people behind a very, very, very good person.
Okay, here's a question, and we've discussed it before in our discussions with Benoit, but your thoughts of the Boumadine deposit of Aya?
I like the deposit. I particularly like the deposit because I think the people who are busy exploring it understand the deposit well. When drilling becomes predictive, which is to say, when the exploration team understands the genesis of the deposit well enough that when they look for an extension thesis and they describe the extension thesis and they propose a test methodology and implement the test methodology, that the drilling becomes predictive. We've seen that work at Abra. We've seen it work at Vizsla. And I think that we're seeing it work at Boumadine. I think, too, and people should refer back to the interview that you and I did with Aya 12 months ago, that in addition to the good technical work they do, the social and political work that they do in Morocco is astonishing. Listeners to this discussion may recall that a year ago, there was a truly devastating earthquake in the Moroccan highlands. And the management team immediately shut the mine down, not because the mine was damaged, but because they realized their obligation to let their workers return to their villages and look after their families. But they did more than that. They said, with the mine closed, we have a lot of surplus talent, we have a lot of surplus equipment. It's very obvious to us that this region is remote and the government won't be able to send you help for 3 months or 4 months or 5 months or 6 months. If there's something we can do in your village, restoring power, restoring water, fixing roads, fixing bridges, given that the mine's down, this is what we're going to do This is what we're going to do. Can you imagine the community and worker support that they got as a consequence of that? What I am attracted to is, yes, the technical expertise of Aya, but also the courage and the foresight to respond to a natural disaster that impacted my communities and workforce the way they did.
Yeah, they seem to be doing everything right over there. Let's see, from the Rural Classroom again, Evan, haven't seen you in a while. Good to see you here. Wants to know if you own Chalice Metals, Rick. This was an exhibitor, I think, last year, right?
I still own Chalice. I'm concerned, as I was then, about the low-grade nature of the deposit. I'm attracted by the location of the deposit, which is basically suburban Perth, and the size of the deposit. I make no mistake, I think the nickel price is going higher. I can't tell you when, but I think it is going higher. I think over 5 years is likely going much higher. And if I'm right about that, being right about the nickel price will likely overcome my concern about the grade. Somebody, in order to own Chalice, has to believe in higher nickel prices, because at this nickel price, even with their proximity to infrastructure and the enormous size of the deposit, you'll have some challenges.
Okay, good question from Zahara. Rick, yesterday we have Brian on, and we were talking about, the topic we started this stream with, frankly, and that is, when to take some gains. And I recalled that in all of our discussions, when you've talked to me about some of your biggest winners, you're honest enough to say, well, look, I didn't hold all the way to the peak. Let's just make this clear. You were selling on the way up. Well, Brian heard that, and he said that, yeah, he remembers those days, and he remembers getting together with you, when you were telling him that you were selling, and him bragging to you that he was still holding. But at the end of the day, your portfolio would outperform because you would avoid the big losers, which seems to be the name of the game in this sector. So Zahara asked, could you please share some insight on that? That might help us to sell well too. Thank you.
I'm reminded of the Bernard Baruch quote. And let's talk about Brian a little bit. Brian is a superb communicator, and superb communicators appeal to people's emotions. And they do that because they're emotional. I'm an okay communicator, but the truth is I'm a credit guy. And so, my outlook is a little different than Brian. The quote goes like this. It was from Bernard Baruch. Bernard Baruch said, the only guy who bought at the absolute bottom and sold at the absolute top was a liar. It didn't happen. I think that in terms of every speculation or every investment, that it's incumbent on the person making that speculation or investment to write down their investment thesis. Why are they doing it? What are they doing it in anticipation of? What would cause failure? What would cause them to understand a failure? What would constitute failure? If you have a sense of the value of something and how that differs from the price, and you have a sense of how time will increase that value, then you are able to take the perturbations in market sentiment and price and apply them in context. You can become a better speculator. I think that Brian is extremely skilled, way, way, way better than me, like his mentor, Jim Blanchard, was, at understanding the impact of a narrative on a market. And I think that's a very valuable skill. But Albert, as you know, I can't even dress myself. The ability that I have to understand the impact of popular culture on valuation, it's just not one of my skill sets. And so I don't go there. I operate on my anticipation of absolute value. Hold on one sec. Bon?
We were supposed to leave 16 minutes.
Albert, I've got to sign off, I'm afraid.
All right.
I've got to go to an appointment.
All right. Thank you, Rick. We will cut this one short, but always appreciate you joining us. Folks, thank you very much for all of your questions. I just want to remind you that we have the symposium coming up in July. Go to symposium.ruleclassroom.com for details. And we're always at ruleclassroom.com weekly with interviews with Rick and other experts. Thanks for all your questions, and we'll see you again next time. Take care.